So today I'm going to explain you about the money and credit, which is I'll cover the whole syllabus. I will cover the whole chapter, which is in NCRT of economics. So money and credit, and money acts as a medium of exchange, stores different values. Means anything you buy in. In the market, anything you buy, it acts as a medium of exchange. If you give the money, he will give you whatever it is, grocery, beverages, whatever it is. If you give the money, he will give the back whatever you want, beverages or whatever it is. Generally these are seen as paper money and coin. Money does not have a money doesn't have the value. Means uh, paper doesn't have the value. Everyone see the money in the paper and coins, but I will say paper doesn't have the value. For what it has the value, I will say further. So money acts as medium of exchange. Consider a case where money is not used as medium. If the money is not used as the medium of exchange, think of that money doesn't have in our country. So what we will do, we will apply the barter system. What is barter system? Barter system means if I give the if I want wheat, he want shoes. I am a shoes preparing person. He will grow the wheat in his fields. So he doesn't want wheats, and I want wheat for survival. I can make chapati, whatever it is. So I want wheat. He wants shoes. I am preparing the shoes. He's a rich person. He wants shoes. So we will exchange the goods itself. I will give him shoes, a pair of shoes. He will give him a 5 kg of wheat or 10 kg of wheat, whatever it is. It will. This system of exchange, the goods exchange, is called barter system. In which, in case where there is no money acts as a medium in this. Take the shoe manufacturer. He wants to sell shoes and buy what? For this requires wheat farmer who wants to buy shoes, that I have explained now. Okay, this system is called double coincidence of want. This is also called barter system. This is also called double coincidence of wants. Whatever you can call this system. Barter is medium in goods, services or exchange directly without a common unit. I have already explained you about this. Where transaction were made in money. Money works as an intermediate. It is used as medium exchange of goods and services. Transaction were made in money because money works as an intermediate for goods and money acts as an intermediate for goods and transporting the things. Money acts as an intermediate for this. So we will use money as a transaction. It is used as a medium of exchange for goods and services. This is a basic statement which you can understand easily. Now, ancient period, there was no money. The cattle were grains, cattle were used as money. What do you mean by cattle? Sheep, goat. Means if you give the goat or sheep grains, that these kind of things were used as the medium of exchange. They were not using the paper coins or whatever now we are using. In that period they were using only the cattle, grains. They were using these kind of things as a medium of exchange. Medieval period, metallic coins. Now the coins of gold, lead were used as money. They started to prepare the money. They started to prepare the money with gold coins and silver, copper, lead and other metals. Modern period. Now paper coins are used. Now present paper coins and coins, paper money are used in nowadays. Modern forms of money. What is a modern forms of money? We will learn now. Okay. Forms of money: currency, deposit check, paper notes, coin, bank. So, Forms of money means how we can send the money, how we can say that he has a money, how we can say that he has a money, and in what forms of money can be transferred. Money can transfer from one person to another. If I want to transfer some amount of money to my brother who is in Hyderabad, so I cannot give him a currency because he will be in Hyderabad. How I can go and give him a currency? So I will deposit by using the check. I will write the check and how many rupees he want. I will transfer him by going to the bank. Now here currency is not used. This is a different form of money. These were transferred from bank to bank. This is transferred from bank to bank. Here no currency nor paper money is used in deposit or check. Here currency, paper notes, coins. If you want to purchase anything near your house, we can give the paper coins. Nowadays phone pay, nowadays another form of money, phone pay, bank to bank transfer. Okay. Okay. Why money is accepted as medium of exchange? It is authorized by government of country. In India, Reserve Bank of India issue currency notes on behalf of the government. It is authorized by the government of the country. Government said that you use the money as the medium of exchange. Government has accepted this, and government told you use money for exchange, because if the money, if any goods doesn't have a value, then if money doesn't act as a medium of exchange, then it becomes difficulty in this 180 crore people of country, this big country. Without money as a medium of exchange, we cannot run the life, because if we want the wheat will grow near some distance. I want wheat, he wants shoes. I have to go and give him. If there is money, I can purchase wherever I want. If I want some goods, I can purchase anywhere near our house. If money is not there, then it become difficult to exchange the goods. Then it become difficult to exchange the goods. In India, Reserve Bank of India, in India, RBI issue currency notes on behalf of the government. All the government have made RBI, which is Reserve Bank of India, which will control all the banks in India, and it also give the loans to other country. Okay. Reserve Bank is the Reserve Bank behalf of the government. The note is only a paper, but the sign of commission of RBI, Reserve Bank of India values. I said that note doesn't have a value. Yes, note doesn't have any value. You have seen that. Now here you can see the sign of the governor. Here you can see the sign of the governor. This has the value. This has the value. this note doesn't have any value. This sign has the value. The governor is saying that he has 100 rupees. He can buy anything from this 100 value. If here 100 100 defines that he has a 100 rupees. He has the value of 100. The governor is promising that he has a 100 rupees. He has a value of 100. He can buy anything from the 100 rupees. This has the value. The governor sign has the value, not the paper. It is just a paper. It is just a paper. Okay. Okay. The currency has value, the text and sign of RBI Commission. The RBI Commission promised that if you have the sign on a note and text, then you have 200 value of the paper. If it is 2000, then it has a 2000 value. If it is 100 rupees, 100, you have the 100 rupees value. Okay. Modern forms of money. Check. Nowadays we are using the checks to transfer from my bank to my brother bank. As I already said that it is a modern form of transferring the money. It the check is used mostly when your relatives or your colleagues you want to transfer anything to your colleagues, then he is in other state, you can go through the check. It is a piece of paper that a person promised to give money for another person. As I already said, he also sign in the check. The person who want to send the money to the other person, he will sign that I am giving him this much money, 2000 only. I am signing on that because I am promising you to give. Okay. Okay. Now, credit card. What do you mean by credit card? Simple. I will explain you in a simple way. What do you mean by? It is one type of loan. It is one type of loan. It is one type of loan. You have used up to 1 lakh, whatever you want. You can buy without giving. After 1 month, you have to pay how much money you have used. You can note this point. Everything what I read here, you can note in your rough notes or whatever it is. So, credit card. You have seen in a Flipkart that it has an offer of credit cards, debit cards. Credit card means that you can buy anything you want. You can buy anything you want. It will not be deducted in your account now itself. It will give time for a month. Whatever you want, you can buy. That will be given by the bank itself. That will be given by the bank itself. It will not be cutted in your account. After 1 month, what you have purchased, what amount you have purchased, that will be deducted in your account. That will be deducted first in your account. It will not be counted. The government, the bank will give the money for it. Okay. Okay. After 1 month, you have to pay. The amount will be deducted in your account itself. Okay. Deposition of money in bank. As you all know, when you want to store the money, when you want to buy something, a car, bike, you will deposit in your account. Then the bank only will give the interest to you. Bank only will give the interest to you, through which for every year they will give 1000, 2000 will be increased when you keep in the bank. It is the interest. They will give 5% interest, 10%. It depends upon the bank which you choose. I will not say the names of the bank. Okay. People deposit money in banks and bank provide interest in the deposited amount. If you deposited 50,000, then they will give the 5% to it. yearly they will increase the 5,000 they will increase in your bank. So uh, if they will not give the interest, you can keep in home itself your money. And another thing why you have to keep in the money in the banks means security. The banks will provide the security for your amount. That is the reason why you have to prefer the banks to keep the money. People can withdraw the money as they require. You can deposit and you can withdraw the money whenever you want, how much ever you want. If I withdraw, if I deposited 50,000, you can withdraw whenever you want, how much ever you want. And nowadays there are some nowadays there are some restrictions of banks. You have to keep 600 in a bank, but mandatory, it is mandatory. You have to keep 600 in bank, obviously you have to keep. And nowadays you can also make zero balance account, means if there is 0 rupees also, your bank will survive. And how much ever you can withdraw, no, how much you have deposited you have to withdraw. If I deposited 50,000, I will withdraw 80,000. How it is possible? No. However, how much you have deposited, that much amount you can withdraw. And in banks money will be safe. Demand okay. Next, demand deposit share essential feature of economy. Demand deposits is accepted widely as a means of payment along currency. What do you mean by demand deposit? Demand deposit is nothing but you can withdraw the money in the bank without the notice. Without giving notice to the bank, you can withdraw the money. And demand deposit share essential feature of economy means nothing but means demand deposit share essential feature of economy means without the transferring of money from person to person, you can transfer the money. Make it possible to directly settle payments without the use of cash. You can transfer the money without using the cash from bank to bank. Then the future of the economy will be developed. This is one of the reason why other countries are developing. Like these features only the country made to be developed. And check a paper interacting bank to pay specific amount from the person's account to the person those name the check has been issued. Means check is simply a paper instructing a pay specific amount from the person. Check is nothing but it is a paper. It is one kind of paper. You give the promise to pay to another person. You give promise in this check to give this much money for this person. This is what do you mean by demand draft? DD. It is a form of paper which gives security that I am giving money. So that check is nothing but so that and there is one problem of check. The what is the problem? If you doesn't have a money, and you are writing the check of 1 lakh, how it is possible? The bank have to give the money. Then the bank have to give the money. They have made the demand draft. It is a form of paper which gives security that I am giving money. The demand draft is nothing but this kind of problems will occur if the person does not have any money in his account and is giving a 1 lakh check to a person. Then bank has to provide the money. so that the demand draft, it is a form, you have any person who has to give the check to a person, they have to fill the form of demand draft, that he is having money in his account, he promises that he has money in his account and he is giving this much money to the person. Draft is that when one person have 200 rupees, then if he give check by giving that I am giving him 800, so I have told that if he has 200 rupees and he is writing the check for 800 rupees, then 600 loss for the bank. How bank can give this amount? Then how bank will give money? Then check bonds will this your parents has been saying sometimes in your houses, yes, the bank has been check bounce, means if you give the money which you doesn't have, that much money you give that much money, if you have 200 you give 800, then will bank will make the check bounce of your account. The person has to pay penalty if the person has wrote, if the person doesn't know that if there is less money in his account and he wrote more to another person, then the bank will not give the check bounce or penalty. If the person has known, the person will be known that I have less money and is giving more money to other person by writing the check, then he may and he has to pay the penalty. The money will be demand draft money surety that I am giving him money with proof. This is the demand. Now working of banks. Banks keep only small part of deposit as cash. Then you might have been thinking that how the bank will provide the interest for us. How they will provide interest for us? The bank will provide a 5% of interest. How it will get the profit? How it will give money for every person? And the interest depends upon the person by person. If he stores more money in the bank, then the bank will give them more interest. And you might have and you may arise a question that how the bank will give that much interest for a person if we deposit the money in the bank. Some banks will offer that I will give you 10%, I will give you 5% if you deposit the money in our bank is full secured, and they might have told you about their banks, how they will give the interest for all the person yearly, how 5,000, what they are mad? No, we are the mad. I'll say you how we are the mad. Okay. Bank keeps only small part of deposit as cash. Banks earns from the difference in interest and deposit and loans. And banks also offer the loans. Bank will give the interest and as well as they will offer the loans. For example, if I want to buy a car, the bank will offer me, of course, when I ask the bank to provide a loan, they will provide the loan. Then I have to pay further, and then when I will take the loan from the bank, they will increase my interest. Means I am taking money from him, then I have to give the interest because I have to give them back money, full money by 6 months, 7 months. There will be some there will be some gap to pay the money. So if they gave 3 months to give the money back of 6 lakhs or 5 lakhs, then I have to pay the interest, monthly interest I have to pay. From that interest what I gave to them, they will earn from that interest. Okay. They will give the interest to the people who will deposit the money, and they will earn the interest from the other people by giving them a loan. Okay, understood. They will give the loan to the, they will provide interest to the people who deposit the money in their banks, and they will take the interest from the people who will take the loans. They will take more interest than what they give. Okay, if they give 5% of interest to the people who deposit in their banks, they will take the money of 9% what they give the loan. Here they will, here they were profited by the 4% of interest. 4% of profit they will earn. By this they will give a lakhs of people a loan, so this they can easily earn the profit, and so that the bank employers have more capital for a month, more monthly income will be for the bank employees. And interest may be changed according to the, interest will be changed according to the what they take the loans. Okay, next come to credit. Credit is nothing but loan. I have told you already about the credit card. It is agreement in which lender supplies the borrower with money, goods and services return for the promise of future payments. If the person, then I have already explained you about the credit card. Same, credit means loan. If I purchase 50,000 of goods, then they will, I have to promise that I will give in the future that money. It is a kind of loan where interest will not be there. That's it. Loan and credit difference is, in loan we have to give the interest to the banks. In credit card we not need any interest to give for the banks. Further, we have to give the amount back what we have used. That amount will be provided first by the bank itself. Positive of loans. What are the positive, what are the positive of loans or credits? One is successfully able to repay the loan with completing his goal for which money has been needed. One profit of loan is that uh, the person who has taken the loans, he is successfully able to repay the loan with completing his goal for which money was needed. Means, if he took the loan, then he will work for the money, and he will regain the money. He has the fear that, yeah, I have took the money from the lender, I have to give him the back, I have to give the money back. So he will struggle, he will hard work to give back the money. Okay, understood. If I took the 50,000 loan, I have to work lot to give the money back, and he'll also achieve the success by hard working. Okay, and if he took the money and he simply sat without any struggles, without any hard works, then of course he will be in jail tomorrow. Yeah. Negative of loans. One is not able to repay the loans or get in loss. Yeah. One will be this kind of people, one will be this kind of people. One will be fear that I have to pay the loan, I have to pay the money back, so he'll work hard. This kind of people will doesn't have good job to repay the loan, so they will be in the loss. This is a negative factor of the loan. And next comes is debt trap. It is a situation in which a borrower used to cycle of robbing or rolling over their loan payments because they are unable to pay the old loan. This leaves the indebted all through their lives. Means if I took loan from one person, then I am unable to pay. Then I will take loan from another person and give for the person of first what I have taken loan. Means concentrate on this sentence that I have took loan from one person. I have took loan from one person. Then I am unable to pay for him back. Have in loss. I have in loss. So that by the fear of him, I will pay him back the money by taking the loan from other person. Okay, this is the first person, this is the second person, this is the first person, this is the second person, this is the loan lender. I will take loan from this person. Okay, I am in loss now. I am unable to pay his loan. This boy gave me loan. I am unable to pay his loan. Then I will go to this person. This person. I will take loan from this person and give to this person. I will give for this person because he will be rash. So that I will take loan from this person and give to this person. So this situation is called debt trap. I am stuck in a loan cycle of loan. So I have to borrow from this and give to this, borrow from this, give to this, and I am unable to pay for this person. Then I have to go for the third person. I have to take from this and give to this. This is called the debt trap. I have explained you in a simple way. Okay, you can note this point and you can write in the examination. Okay, what are the terms of credit? Means about the basis the bank will give loan for a person. Means what are the terms of credits? What do you mean by terms? What do you mean by terms? Means if uh, on the basis if I want to take a loan from a person, on what basis they will give me a loan? Understanding my point. If this person want a loan, on what basis, on what background the person will get the loan? Any document, any collateral should be there, no? Any collateral should be there. Collateral means any document or house, his own house, or documents of the fields, plots, whatever it is. These are the called as collaterals. Means on the basis of collateral they can give the loans to him. Yes, he has the own house. He has the own house. Yes, we can give him a money on the basis of this. If he unable to pay, we can take out the house from him. It is a promise. It is a promise. Terms of credit. Terms what we have giving the loan to him. Simple. Based on interest, based on collateral, based on the documentation, mode of repayment. Interest rate means how much interest rate he has. Means if I take a loan, I have to give the interest for him. How much he can pay the interest. And collateral means I have already told document. This is also documentation. What documents you have, according to filling of the documents, they will give the loans. And mode of repayment. Mode of repayment means at what time he can repay the amount. there will be some times, there will be some rules and regulations at what before this period only he has to pay the loan, he has to pay the amount back. In EMI also you have been known that before the 4 months you have to pay this amount, EMI loan. Here also same mode of repayment, at what time he can give me the amount back. On these terms also they will be giving the loans. Collateral security means collateral is an asset that the borrower, I have already said about this, you can note down. Collateral means the bank will ensure that with if he has a collateral like houses, plot, land, then they will be asking the documentation of the collateral, then then they will give the surety of the loan. If the borrower fails to repay the loan, the lender has the right to sell the asset of collateral to obtain payment. I have already said, if the person is unable to repay the loan, then the collateral, the asset what he has to be given to the bank people. Now first forms of credit. What is interest rate? Formal sectors demands less interest compared to informal sector. At present, formal sector demand 8 to 12% interest rate. Formal sector demands less rate of interest compared to informal sector. At percent demand 8 to 12% interest rate. This means that the interest rate which are given by the banks, compared to the banks, the private banks and private associations will be there to give the loans. Compared to the banks, the informal sector provide more interest compared to the formal sectors, and the formal sectors demand 8 to 12% interest rate, and informal sectors will provide and will demand for the more interest compared to the formal sector. And documents showing employment records and salary before the bank agreed to give her the loan. It also includes collateral paper, identity proof, and some other details. Documentation means you have to provide some documents related to your salary records before the bank agreed to give her the loan. Means before giving the loan, the bank will go through your records and salary, that he is capable to repay the loan, or the bank will check the salary records. And it also includes collateral papers, identity proof, and it also includes the land collateral, and it also includes the plot. If you have any plot, you have to give the documents about of the plots, that if you unable to repay the loan, then the bank will take the papers, and you have to give the plot for the bank instead of the money. The borrower should pay the mode of repayment. The borrower should pay the back the interest and the principal amount weekly or monthly by cash or checks as decided time of the making bank. While making the agreement, the bank will say that you have to give this much of interest per month or per week. They will decide this while giving or while making the agreement itself. They will the bank will provide, the bank will made people to agree with how much you are going to pay for weekly or monthly interest. By this the bank will provide the loan for a person. Loans for loans from cooperative societies as small scale organizations formed by the people themselves. The members of cooperative pool their resources in the account of the cooperative and then extend loans to those in need. Cooperatives also take loans from the banks. These are several type of cooperative: industrial workers cooperatives, Cooperative societies means a small scale, in a if you think, in schools, some teachers made an cooperative society, and they were, all the teachers have, all the teachers, from each teacher they pay 1,000 per year, 1,000 per month, to give the loans for the poor. If the bank is unable to give the loans, if the cooperatives will help when a person doesn't have a collateral. If a person doesn't have the collateral, then obviously the bank will not provide the loan. If in this situation, people can approach to the cooperative societies, as a small scale industry organization formed by the people themselves. All the people in the small scale industries make a group, and they will give the money for a loan lender, loan borrower. The number of cooperative pool their resources of the account of cooperative and extend loans to those in need. They will give the loans who is in need of the loan, and they will take the they will take the money back, and they will not force, as the banks will force, and they will not take any collateral if it is not there. If the collateral is there, obviously they will take the collateral. Cooperatives also take loans from the banks. These people take the loans from the banks, and they will provide to the people who is in need of loans. They will take the loans from the banks, and they will give loans to the people who is in need of loans. By this, the loan provided by the cooperatives also been advantage for a person who doesn't have the collaterals. And these are the several type of cooperative: industrial, workers cooperatives. Whereas in industrial, they made some group of people through which they will monthly they will give the amount to the cooperative society, and they'll make, if I give 10,000 per year, then I will make, I have to get this much of interest from the month. If I give 10,000, then I'll ask 5% of interest from the borrower of the loan. By this, how much I give to the society, cooperative society, that much of interest I will be asking from the society. Formal sector, informal sector. You can note these points. Difference between the formal sector and informal sector includes bank and cooperatives. As I already said, that formal sector comes as banks and cooperatives, as informal sectors comes under the friends, colleagues, traders, employees. If I zamindars means informal sector. Informal sector is advantage for the people who doesn't have the collateral. Includes banks and corporate, and these formal sectors need, obviously the collateral is needed for the formal sector. Bank require collateral, proper document to give loan. Repeated borrowing can lead to debt trap. Here in informal sector, most of the chances will be of a debt trap. As I already explained the debt trap, that if I take a loan from a person and I unable to pay the loan, then I'll ask from another person, and I'll repay for the first person. Then I will be in the debt trap. If the collateral is not there, then the disadvantage is debt trap. Apart from profit making, they also have objective social welfare. Apart from making profit, if I borrow the loan from the formal sector, then I'll get the profit, and social welfare also I'll get from the formal sector. Means health, they will provide the health loans also from formal sector. They will provide the health loans from the formal sector also. Their only motive is to extract profit, as much as possible. The money lenders, friends, traders, be they will be expecting the profit from the loan. They will not give the profit, they will not give the loan for the welfare purpose. They will give the loan for the profit of interest. They will provide the loan from only for the profit. Terms of credits, fair and reasonable. The formal sector provides the formal sectors say the people who took the loan, they will always approach to the less percent of interest. They impose very tough and sometimes even unreasonable terms of credits or borrowers. They will ask they'll ask high percent of interest to give to expect. They will expect high percent of interest from the borrower, and which is unreasonable. For unreasonable, they will ask the high interest. And the RBI supervises its functioning. When you took the loan from the banks, the RBI will control the all banks, so that if any problem arises, we can approach to the RBI. Here there are individuals, individuals. We can, if the these informal sectors are not guaranteed from the banks. It is not secure. It is not as much as it is not secured as much as the formal sector. So the banks does not supervises the informal sector. But poor people are still dependent on informal sector of credit, because lack of bank of rural areas, people documentation, collateral are not present in many other cases. To overcome the problem, people created self-help groups. Yep, I have already informed about you this topic. But poor people who are staying in the rural areas, there the banks may not be established. The banks may not be established, so they cannot borrow the loan from the banks. So there will be some zamindars who are rich, so they can provide the loans. They are informal sector, so they will the poor people and who are staying in the rural areas will approach for the informal sectors for the loans. And the another reason for approaching the informal sector is documentation. If there is no documentation, the bank will not provide the loan for a person. So obviously the person should approach to the informal sector. To overcome these problems, people created self-help groups. What is self-help groups? To overcome these kind of reasons, lack of bank and lack of collateral, to overcome these kind of problems, they created self-help groups. What is self-help groups? I'll explain now. Self-help groups, especially women, these are small group of poor people who promote small savings among their members. They typically help self-help groups as 15 to 20 members, usually belonging to one neighborhood, who met to save regularly. Means, as I already said, these self-help groups are made only for the women. These are small groups of people, poor people, which promote small savings among their members. Means, if a person is need in a loan, the person is need in a loan, then who and is staying in a rural area, how can he get the loan? So in a family, they will put some amount. They will put some amount in a family. Every person will give the amount for one person. Every person will give the amount for a person. Every person will add the amount. I'll give 1,000 and my brother will give 2,000. And my mother will give 8,000. So for from all the members of a family, all the members of the neighborhood, we will collect the money and give for a person who is in need of a money. We are helping ourselves. Self help groups. If I need in myself is needing money, then all the people around me, all the peoples of neighborhood will they will add money, and they will provide me money. They will be adding every month. And every savings will be added for these help groups. And and they also need to give back the money for a person. 50 to 20 members will be in a self help groups. One group of people will add the money and give for a person who is in need of loan. And advantage of these help groups are, it helps borrower to overcome the problem of collateral, and there will be no collateral for these kind of help groups. People can get timely loans for a variety of purpose, reasonable interest, at reasonable interest. SHD or building blocks organizations of the rural poor. They have made in rural areas. These are made by constructing the buildings and blocks, which were giving the loans without any collateral, and they will provide less interest compared to formal and informal sector. The regular meeting of group provides a platform how to discuss and act on a variety social issues: health, nutrition, domestic violence. It helps women to become financially independent. Means the regular in self-help groups, the meeting will be arranged. Meeting will be arranged monthly, weekly, to discuss about the problems of a person, and discuss about the health, nutrition, domestic violence. If there is any problem for a person, he will be raising his voice and he will be discussing. Then every person will look after his issues, and they will give the money for a person, and it helps to become financially independent. If the women want any capital, any money for a business or whatever it is, then she will be more independent, more financially independent. He can approach to the self help groups. Then they will provide the loan for women. This is especially for a woman to start a business or whatever it is, health, or she want to build a house, whatever it is. And that's it for today. Thank you for watching. Keep smiling and be safe. We'll meet in the next video. Till then, goodbye.